this time I'm going to make sure to share my screen and then we'll go ahead and look at some charts. So, happy Sunday. Happy Sunday. I am here to record a video. I've been promising to do a video for a minute, guys, but I did have a move and really had to transition into a new schedule for me and my kids. It was a bit crazy for a minute, getting us adjusted to a new area and also just kind of to get into the swing of our routine that we had before our move, unpacking, buying stuff for the house. It was just a lot. So I just needed to take a mental break, but I do appreciate everyone because you guys have been just sticking with me. And so I'm back to my regular schedule. Excited to get a video up. I was so excited that I already recorded a video. I was ready to post a video. No screen share, but that's cool. We're back. We're back at it. We're going to do another video and subscribe. Please do feel free to subscribe and support the channel. You can also leave comments if you have any questions or just want to give some feedback on the video. All right. So the first thing I want to talk about is Friday, right? So Friday we closed. There were some nice movers on Friday if you were into the market. And so a few things that I had my eyes on Friday. Let's see. It actually was a pretty good day Friday if you caught the right trades. For one, Carvana took a really nice dip towards the end of the day that I was able to catch 150% profit return on Carvana. What was another trade I took? UNH. UNH gave a nice profit of 145% return. And I believe that was calls on UNH this time. Usually it's been puts. They've been printing on puts, but this was a nice call option on UNH. And I think Friday that was it. It really was just Carvana and UNH. I don't think I did too much. It was a busy work day, so I caught a trade on a break, and that was about all I believe I was interested in. Um, so we'll look at the market, right? Because one of the key things that we need to pay attention to was that as soon as the market closed, some very interesting information dropped. And what did we see? We've seen the price of a lot of stocks drop. So we'll look at that for a second. We're going to go to our screeners and we are going to look at our heat map. And I'm going to set this. So this is how we've seen green, right? We've seen green when we closed Friday. Some things move more than others. It wasn't a big day like for Microsoft, Nvidia, Apple, Amazon. You can see the gray there. Eli Lilly had a great day for calls. Again, UNH was a mover somewhere. Look at Walmart, had a little bit of a move, but we've seen green. We did not see a sea of red, but at post market, and so if you're using your heat map and you go to, let's see, I had to come back and make sure I'm recording, guys, because very traumatizing to not screen share the video. But I think I'm going to give you more since I'm back here and futures has opened up. But anyway, so we're going to go to post market, right? Look at that. From closing the day like this to post market looking like this. Insane, very heartbreaking. If you were heavily into positions of calls, me, I didn't really do anything outside of Nvidia, and I think Nvidia and starting to buy shares of Intel. So not too big of a deal for me. I mean, I didn't even go heavy on Nvidia, so we'll deal with what tomorrow brings. We can take a look at let's just go to NQ and see what we're looking like in the futures. So let's look at it from the 15 minutes, see what we're doing. And so if we can find Friday, where's Friday? Okay, here's Friday, right? So you see that big sell-off drop right here. We lost $96. And so now the futures is opening up pretty low compared to again how we closed on Friday, and I don't really see too much signals that we're gonna go back up yet. So we'll have to keep an eye on it. So let's talk about the news real quick that dropped that caused the market to drop post-market after hours. Moody's rating gave the U.S. government a downgrade in their credit rating. So this downgrade definitely caused a very uh, cautious reaction to investors post-market after hours, and so there was selling. The downgrade led to an increase in bond yields, signaling higher borrowing costs and potential inflationary pressures. The shift prompted a sell-off in equities as investors reassess risk in light of the government's diminished credit worthiness. That just sounds bad for a country. So we're seeing a pullback, and you can even look at it from, let's just drop down for a second. Yeah, we got a nice little bounce right at the opening on Sunday, but yeah, it just doesn't look good. I could have took puts when I got this arc, so if you're trading futures, you get your signal at the 5 minute. We're at support, we lose to 200. No, this is anchored VWAP. We'll come down likely to this area here. And again, if the market just wants to sell off based on this news, then we are going to open up red. We'll have to see. So far, futures is looking pretty weak to me. If you're paper trading or needing to get a little practice in, I would say, hey, this is probably a time to get in trading view, click some buy and sell based on how you trade and your trading style and get some practice. And you can do the same thing for crypto. Paper trading crypto 24 hours helps you with your entry exit. So that way, when you're in there putting in real money, you're disciplining yourself to follow the charts. All right, that's what I wanted to share. It doesn't look good for us going into Monday. So far, futures isn't really showing any type of strength. Um, to say that we're going to continue. We had already hit a order block right on Friday, and well, actually, I think the sell-off just started to happen on Friday. Yeah, it just happened. So where we thought we could probably get some nice moves back to the upside, break some highs, break some resistance, we're just not seeing them. Check out the wolf chart in real time, right? You get this arc, right? And we get it in an order block. And now we're just continuing to see a pullback. You can even enter puts under the break of the trend line here, and we'd ride it all the way down. I'm not going to paper trade because I want to focus on our video. But again, if you're looking to see the wolf chart in action from the signal down, 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 looking at support somewhere around here. And then again, I think they're going to probably end up targeting some of these order blocks here. Zoom out on NQ for a second. Nice gap to close right here. Yep, right at here. Yeah, it just doesn't look too great. Comparing it to the 1 day, we'll have to see how we end up opening. All right. I'm not going to spend too much time. I just wanted to share that with you, so don't come into the opening being biased to being a bull if we're going to see any type of pullback to test support. It does not mean that we're going to go as low as we were before, but something to keep in mind. All right, so let's go to the Apple chart. That was one of the charts that I did have open. I did look ahead at the economics on the last video I recorded that I can't post. And I did see that Thursday will be a good day for us to follow and be on alert because we will have unemployment data. I think some other information is popping out. We also have Fed speaking different days of the week, and we have some crude oil data. So keep an eye out. Thursday, I think, will be the day though to watch for a lot of the economic data that we'll post. If you don't know what that will mean to you and your trades, then what you want to do is also go to ChatGPT and just ask, utilize AI. Now we're looking at the Apple chart, and it's just one main thing on the Apple chart that I really want to call out because we're kind of in a box. Like if you just draw a box on Apple, you can see that we have a range that we need to break. And that range is about right here, right? So if you just kind of look at this box right here to visually see what we're doing, we're in this range. We need to break out either direction, right? Either direction. If we get a breakout, we'll test the 12 and see if support holds somewhere around here. But for Apple right now, my main watch is that are we going to break 214.56? if we're not going to break 214.56, I am targeting somewhere lower around the 12 EMA here on the daily. On the monthly chart, if we just kind of get a big picture of what's happening with Apple, it doesn't give a very strong signal yet on the monthly chart because although we have this nice wick here and a nice recovery to test support at 214.56, we did not break the high of the previous month. We really still have quite a bit of work to do to get up there, and we are off the 12 EMA. So that all signals some cautionary reaction to Apple so far. I still don't see the move just yet on Apple. I would say again, they have to break that 214.56 to tell me that, yeah, they're going to go a little bit higher. We'll zoom into the weekly for a quick view. I skipped the 2 week, guys, just because I want to move through some charts, but you can always check the 2 week as well. I do as part of my routine for higher time frame analysis, and you can also just see where we are in the charts there. The thing with Apple that I can see is the main story is truly just that break of that resistance, and then we'll just look to trade from there, likely to test somewhere around 220 to 25 and make our moves up. Support, I mean, nearest resistance on the weekly looks really good all the way up to 237 if we get a break above 225 and we're holding. But we're gonna trade that a little bit closer in, and so again, we just have to see that breakout here. We break out, we'll get to that 220 area. And then we have a very bearish order block here, um, right at the 200. So all those things keep in mind when you're doing your trade. I think I just set an alert here and I won't do anything. If you're employed, you don't have to stare. Your goal is not to be sitting at the chart staring. Obviously, we want to be in an environment where we can do more swing trades, and that's just a bit tricky right now in this market. But when VIX is at a certain level, you're open to being able to do a little bit more with swing trades. In the meantime, look to see what stocks might have earnings coming up in a month, in 2 months, and you can potentially trade, find some nice trade setups leading up to a stock that has earnings. I like to look a month or two out with big tech, right, you just look to see where they're going to pull back ahead of their next earnings, especially for the Max 7, and see how you can position yourself. With Apple, we don't have earnings until July 23rd. So look to see, look to see if we get a nice, real healthy pullback, and maybe there is a nice opportunity to get in long ahead of their next earnings. But I wouldn't, my thing right now is where they're at. Break would have to be 214.56. Some again, that's it for Apple. We won't spend too much time on that one. What was another one I had? Let's look at Intel. All right, and so I'll just take a moment. If you are wondering, if you're new and not familiar with my trading setup, I do use the Wolf chart. It is a trading confirmation system built into one chart. We're trained on it. We're a very great group, supportive group. The group is growing. We call ourselves the Wolf Pack. It's led by Sean. You can check out his YouTube page. I'll link it in the comments as well as a link to the Wolf chart. If you are interested, it is a monthly subscription. And in that, there is just I can't even list all the support we have, just being a part of the Wolf chart and being able to trade with a team using the same setup that you use. So if you're interested, again, I can link his YouTube so you can get an idea from the creator himself on his chart system. And I'll also leave a link in the comments for anyone interested in a subscription to the Wolf chart. But back to the charts and what we're looking at with Intel. I wanted to zoom out and call out something on the monthly chart. Now, Intel on the monthly chart has hit an order block, right? This is an area they haven't tested since price hasn't been here since 2013. So that means all years ahead, after 2013, we've been well above this level. We came a little bit close to it, but now we've actually reached it. There's a few things to look at here. One, we're under the 200, right? So when price is under your 200, whether you're using the weighted, EMA, SMA, it's all just a bearish move when price is under the 200. And so you have to keep that in mind, especially when you're looking at that from a bigger view like the monthly. We also have price under the 12 EMA. We got a crossover in March between the two. Actually, it wasn't a crossover. The actual crossover happened here in 2022. Um, then they recovered a little bit, and then the EMAs met, and then they just pulled back from each other again. So here we are. Ideally, we want to see price come all the way back full circle from this bullish order block. What I wanted to call out is by using the wolf chart, we follow the wolf trend moving average. It is an early trend detector. And so it's already given a signal in this order block that, hey, we're probably going to start seeing that trend reversal here. So if you want to see what that means, right? So let's just look at this one. Once it formed here on the monthly chart, look at the move that Intel made. Once it gave us, this is called the inverse arc. Once it gave us a arc here at the peak, you can see the move to the downside. Catching that on a monthly, I mean, between shares and long options, then you have a great opportunity here with Intel. You just have to then manage it from smaller time frames like your weekly, 2 week, and so forth. When it comes to day trades, you just manage it at the time frame that you typically would handle your day trades. But for me, I'm more interested in positions that you can hold longer, right? And so with Intel, the verdict is really going to be out to when they get around closer to $24, $25. They need to break out of the box. It's kind of the same story. Like when you look at it from the monthly and in the way we looked at it for Apple, they need to get out this box that they're in right here. If they can break out either direction, then you kind of have an idea of what's going to happen. But the thing is, this is small account friendly. And also, when you're looking to just, you're not ready to get into a lot of options, especially in the small account, options can definitely make or break you if you're not skillful enough to, and you don't have the right management skills, risk management skills. Here's a stock where you can actually buy shares of it. It's affordable at $21 right now. And you have to ask yourself, when will I get another opportunity to buy Intel this low when it hasn't even come back to this price until now? So the last time we've seen this price was 2013. It took that long for it to ever come back too. And in between that time, it peaked up as high as $69. So these are opportunities that we may not see again in the market in the next few years. So not saying you go in and load the boat. I'm just saying this is one of those ones where you kind of wish you would have bought Nvidia at $80 or less, $90 or less. Here's an opportunity with Intel. You can then follow the news, see what they're doing with the government and any contracts they have out there, and keep them on your radar. Shares look good in this order block, and as long as they're holding price on the monthly here, I'm not mad at it. Now, again, everything is pulling back in the market. We could keep NQ open since we're just already here and keep up with how the market is moving while we go through this video. We're going to go down to the 15 minutes. And yeah, you can kind of just keep track of what's happening. Actually, we can go and do a 5 minute watch. So look what it did since I was sharing it earlier, right? We saw the arc happening. And one of the things I was saying was we're going to come somewhere around here. We broke through the support and we're at the trend line. Next move would be losing the trend line, hitting this order block. Put a paper traded this to show you guys live, but maybe next time. Anyway, we'll keep this chart open just to see how this all plays out. Do we respect this trend line? There's some people that trade trend lines, so I respect, and then I move back up, back to this fair value gap, potentially targeting this order block if we just get a nice bounce. It just doesn't look good for us in calls. All right, so real quick on Intel, we're in a box. If you just look at the bigger picture, we need to break out this box. You catch that breakout of this box. We hold that order block that we saw on the monthly. We hold support here on the weekly. We're looking at a nice setup all the way up to about 30s, target to 200. The weekly chart, if we zoom in, is also trying to form a inverse arc, which is a bullish signal at the 12 EMA. Now, for me, I'm going to try something. I'm going to set myself an alert, and I'm going to try to remember how we set this alert up. But I do want to see this happen. I want to see a crossover, a crossing, and we want to follow the wolf trend. I believe it's the one with ATR. Yep, crossing, and we want to see two crossing over, crossing each other. So we'll set that at the smooth line. And we'll see how that plays out. So I've set myself an alert. And so from the weekly chart, once I get a cross of the two, I will be triggered to come back to this chart. And again, a weekly cross looks good. We'll start to target 23. We'll start to target that area around 25. And what we want to see is a break out of this box that we have been in on these larger time frames for a minute. I mean, we've been here since July of 2024. We need to break out. Breaking out will challenge these areas right here on the weekly, your nearest resistance, that's your strike prices. So if you were taking the trade here at the 12 EMA or once we get the crossover, I would personally target a strike price of $23 and under. You could technically do 24 and under, but I mean, to be in the money, get you a nice Greek for a long swing. You want to target your nearest resistance, which would be targeting the high from a month that we need to break out. I mean, it says previous month high from the wolf chart, but for me to be this weekly candle that was created on March 31st, the week of March 31st. That's the story in Intel. Other than that, you can measure your high and low of the day if you want to day trade it or whatever you want to do with it. I'm just calling it out to your attention that on the monthly, we're getting a nice signal. And as you can see, when those signals happen on the wolf chart with the wolf trend moving average, we get the confirmation, we get the gap up, we get the confirmation, we get the pullback. And so you just follow that one EMA that Sean created along with um, other setups that you're following, whether it's a 12 EMA, the 9 EMA, you're likely to have some pretty successful trade setups. You just have to know where your target is. All right, so Intel putting it on the radar for our people that have small accounts. If you're just interested, someone's wanting to build a position with shares. One that we've been having a lot of fun and hype on has been Eli Lilly. So let's look at the chart. All right, Lilly. Now, obviously, we've been in a downtrend. Um, we've been in a downtrend for Eli Lilly since their earnings. Well, not since their earnings, but we had a pretty significant gap down from earnings. So when you look at Eli Lilly, uh, let's get into the monthly real quick. We are seeing a few things. We had the wolf trend moving average crossover happen here. We had price falling under it here. We came all the way back to our 12. And so price is just battling it out here at the 12 EMA, hit a fair value gap. And the verdict is still out, in my opinion, on Eli Lilly. If we zoom in a little bit, we are getting the red of the wolf trend moving averages crossing back above the green. And that happened here. And even when you look at it from a 2 week standpoint, there's nothing significant yet happening to say that we're reversing our trend. We're just getting some really nice gap fills as we move down. It's almost like you can look at it again as we're creating those lower highs, right? So from this pullback, we gap down, got this high. This pullback, we gap down. We potentially have this as the high on the weekly chart. And this again wasn't impressive bounce in my opinion. But when you look at it, it was a $22 gain for last week of what we lost of the $89 the previous week and $60 the week before. So if you're just looking at it like that, nothing yet looks like, hey, this is truly reversing. Healthcare sector is just looking a hot mess in my opinion, but you have to think to yourself, when do you get these type of buying opportunities on some of these charts, especially charts like UNH? When is the next time you're going to see UNH this low? When do you need to start pulling the trigger to building shares in UNH, right? Because I mean, it's not going to go anywhere. The healthcare sector is going to be there. And so you got to start analyzing the right buy-in opportunities on some of these charts where we're seeing lows that we haven't seen for years. Not saying that we have even reached our bottom yet. I'm saying that you have to start paying attention because everyone wants to buy here. But what happens when we get here and you have a buy-in opportunity, but you skip it? And now once we get the hype around here, you're trying to buy, but we hit a fair value gap and we might come right back down. Again, just things to think about, especially with these type of companies that have a lot of attention on them. You know, Eli Lilly can come out with some news about a new breakthrough in their a drug, weight loss drug or something, and we're booming right back up. Trump gave them a shout out in one of his speeches and what they're doing despite of the push to reduce prices for prescription drugs. You're seeing that he hyped them up a little bit and then they got a nice little move. Now, again, am I impressed? Not necessarily. If price can hold above, I guess we could say about 752, and I'm just throwing out a rough number. You could even measure the high and the low of this day. Then yeah, you'll probably start to get a confirmation that we're going to try to reclaim the 12 EMA somewhere around 765. And then we'll hit this fair value gap that was created from this candle here May 6th. One thing to know is that why we like Eli Lilly is even on a day when I buy out the money on Eli Lilly, I mean, those contracts are expensive. But even if you just grab out the money, if you grab out the money on a day when they're losing $100, or if you grab out the money on a day when they're losing $46 or $25, you're going to be profitable as long as you have control of your entries with a plan to exit. I haven't had an issue getting out the money in Eli Lilly when I trade a trending day for them. Now, on a day like this, it's just an inside boring day. They only did a plus 160. Then the next day over, they did a negative $25 by the time they closed the candle. So that's a 3% downside move. That's 3% of your capital in which you invested if you were betting for the downside. I don't like saying betting, but you have direction and you're following your system saying that you should be going to the downside in this particular trade. Nevertheless, we're getting met on the daily at an order block. We are starting to see the wolf trend warning to cross over. Again, one of those easy setups where I can just go in here, set up an alert based on my wolf trend moving average, and I'm going to follow it based on crossing. Because all I want is that crossover to happen, and I want it to be these two crossing over, wolf trend moving average. And so I'm just going to follow it like that and set my alert. Now it's created. Once these two cross over, I don't have to stare at the chart. I just get an alert. Boom. I'm able to start planning a trade, taking it to a smaller time frame to manage my entry. Look at what happened when we got the crossover here. We can see that money was already starting to come in here. We created this order block. We came back to it. We get the cross inverse arc and we pop and we do a really nice gap up. We're at $900. We peaked actually from this candle at 902.50. What happened after that? They had earnings, right? So if you were trying to buy at the top, guess what? You got crushed because earnings took a $100 move to the downside, giving us this inverse arc. This trade, this stock has been going down ever since, right back to this order block. Close the gap. Now we just have to wonder, do we hold support? You plan your trade. So that's the story in Eli Lilly. You can get deeper into the charts and plan it. Almost can say if we're looking at it so far, we see let's see if I could look for right here. Move this up right here. We're getting a nice move where I was trying to create a visual setup right here to show you like a double bottom, but as you can see, we're here, close the gap here. And so as long as we don't lose the support here, we could have that gap up right to test some of the, we'll say $800, 790s, so forth. We have to hold above this trend line. We have to hold support here, and we want to get that crossover to give us a true indication that we're moving back to the upside to test some resistance. So that looks really good on Eli Lilly. I mean, we'll just have to see what we continue to get out of that chart. Um, NVIDIA, we can look at. I know a lot of people are kind of looking at this one ahead of earnings. So NVIDIA has earnings, and we know this is one of our Mag 7, right? So they have earnings on the 28th. They are a big market mover. So we need to see what's happening here. We are very close to hitting this order block, and we would be hitting it at about a price of 137.93. 137.93. When we get there, then you know we've met bears, right? And so the bears are going to be camped out here. They're going to be sitting around 142. So you're going to want to start to see us target and test that resistance. The question is, with earnings happening on the 28th, are we going to get a pullback or are we going to get more of a push, right? Because we've been getting a nice push really the month of May on NVIDIA. Those that are winning were the ones that were not scared to pull the trigger when NVIDIA was down here. Just in April at $86, and we're already gapped up. NVIDIA is something else. We've already gapped up, prices back above the 200 weighted moving average on a daily, and we're already hitting an order block. So you just want to keep watch of that one ahead of earnings. Do we gamble earnings? And I feel like with NVIDIA, it is a gamble. Then, that's the risk that you're willing to take. But when you are able to plan your earning plays, right? Like let's just say we were looking at NVIDIA once it hit here, and we know that they have earnings coming up around here in July, but we see that they pull back all the way to $92.11. Now we just have to follow the move from here. We wait for a signal that price is starting to reclaim our EMAs and holding. This one would have been a nice area right here. Then we get this nice move all the way up. We get another confirmation when we break this trend line, which happened at the beginning of May. And then we just been on the move ever since. So you plan your earnings positions ahead so that way you can catch the momentum leading up to earnings. And if you're going to do anything from there, you're just leaving a runner. Like you've taken your profit and your investment and you're leaving just maybe a contract open to see what happens. Do we gap up, make new highs from earnings, or do we crash down? You don't know. But you've already been able to plan your trade because you were ahead of earnings and you were catching the moves ahead of earnings. And a lot of times with these stocks, you'll see the gap ups, money moving in ahead of their earnings, right? And so that's what we're seeing. Really nice move on NVIDIA leading up to their earnings. So we're getting closer to that date where they'll be posting their earnings after hours. Let's look at our NQ chart. See, yep, look at that, guys. It played out perfect. Played out perfect. We are definitely looking like we'll be opening pretty red on Monday. But look at this. Nice gap down all the way to the target I told you once we lost support. Once we lost a trend line, we hit this order block. Now, if they clear all of this, we saw in the larger time frames where we're going. Probably going to target this low here, somewhere around $21,192. We've already broke the low of the previous day, which was Friday. So even if you took the trade here, you're already in profit, just following the downside move. So yeah, futures looks very bad for us on Monday. We'll have to see where we find support in some of these stocks. But let's keep moving on. We're going to move on to another chart. Let's look at, let's see, we looked at Lily, we looked at Apple. Let's take a look at Google. All right, so when we look at Google, Google is at a price where it needs to break and clear this order block on the daily and reclaim the 200 on the daily. Now, I'm doing all of this review today just for the sake of time off the Wolf chart. But if you're not trading the Wolf chart and you're using a different setup with different EMAs, you kind of got to look at the same concept where you know your 200 is a significant EMA that we need to reclaim. And so even if you're using a 200 EMA, I'm using the 200 weighted moving average. If you're using the 9, I'm using the 12 EMA, price above, price below. Those are some of the concepts, right? When price is below, we're in a downtrend. When price is under the 200, we're definitely looking at a downtrend. And what we want to happen with Google is for them to reclaim their 200 moving average. So that's going to put us around breaking above about 172, somewhere around there. If we can hold, then we have a nice target to test 186, 187. So that's the verdict on Google. I just wanted to give a quick preview. I can give some exact numbers. For example, the true break that we want to see on Google is 170.63. When we do that, we're going to be running right into our 200. This is why I say about 172 is where we want to break price and have a hold there on Google. So not much of a story until we do that. So what you want to do is just set yourself an alert, right? Like even if you catch it in a pullback and target you and set your strike prices for your nearest resistance or you're building up on shares, the key here is that Google needs to reclaim their 200 weighted moving average on my chart and clear this order block. So we'll see how they do as well going into the week. Let's see if I can see ahead. Let's see. Google, Google, Google. I thought I had them on. So yeah, stocks are post after hours this overnight looking really bad. QQ is down $5.31. Um, Now actually, since we are seeing this downtrend, but maybe you don't want to go into puts, here's one to watch. Let's see if it will be moving. Let's see how we closed. So here's one to watch, gold. Um, you want to see if money's going to flow to gold while we're in this downtrend on tomorrow, right? So gold had a pretty good pullback on Friday. They had a nice gap down on Friday, um, which they then reclaimed support, broke above the high of Thursday. I mean, sorry, the low of Thursday, and they're actually probably going to look pretty good. So if I look at what they're doing overnight right now on gold, they're already up $4.95. So gold looks good, right? When you're looking and seeing that the market is coming down, but maybe you're not comfortable with puts, consider gold as one of your trade setups. I would just be looking for gold to break the high of 294.58, which they already did overnight. And then you're looking to see if they break the hold of 297.90, and they've already done that. So we're looking at gold to get back to 300 and above. If we're going to be in a downtrend with some other stocks, it may be a potential setup to trade the inverse by seeing gold and maybe a few other sectors have money flowing to it um, while we're down in tech and a few other stocks. Um, let's see. Let's let's take a quick peek. I'm going to keep going back to this charts here. Keep going back to NQ just to see where we're landing. So yeah, they're gonna battle it out right here in this order block, and we'll just see if they work through all of that, which again is just not gonna be the signal we want. So when Trump was saying, "Hey, it's a good time to buy a stock," we gotta wonder, is it really? When we just got a real bad downgrade. Maybe it is, maybe it isn't. We're not gonna get political. We're just gonna see what's the truth in that. Um, in okay, we did NVIDIA. Let's look at SPY. We got a lot of SPY lovers here. I'm usually on the QQQ NQ side of things, but we'll look at SPY and see where we could be landed on SPY. We're gonna look at the monthly chart. And yeah, we got a signal on SPY on the monthly chart that led us on a crazy pullback all the way to a low in April of 481.80 on SPY, just to gap up and try to challenge the high of March's point. And that didn't happen yet. We haven't broke the high of March, right? So March's high was 597.34. We closed so far at 594.50. Um, so I mean that was the high point of this candle. We closed at 594.20 so far this month. With the pullback, we're not saying that we could be testing some lows or even losing a 12 on the monthly. We just really need to watch it because what we wanted to see happen next was we close above March's high. That hasn't happened. Most people trade SPY on the daily, and where you're going to be looking for price to fall if it's going to keep dropping is somewhere around. Actually, I'm going to pull up SPY overnight real quick, see where we are. So SPY is sitting at 589.49 overnight. 589.49 is somewhere right here, challenging the low of Friday and losing it because Friday's low was 589.28. So we're close to losing the low of that. So then our next target would likely be somewhere around 586 and potentially challenging a low here at 585.10 and then so forth. There is a gap to fill that would probably bring us all the way down to 575 again. So you'll just place SPY in the direction you see it opening, give it time to really prove itself. Because honestly, if price could hold above 590.97 and then break above 594.50, we were going to make a nice target to here. The gap down so far from overnight is truly driven by the data that dropped. But it could be a healthy pullback and a nice opportunity to get in before we make this next stretch up. So we can do this, test here, bounce back. Keep watch of SPY. I'll post QQQ in Discord, and I think I will wrap up here. I don't want to keep this video going too long. I may post another one midweek, but for sure we'll be back at it again on Sunday for a preview before the week starts. Let me know if you have any questions in the comments. Also, remember to like and subscribe to the channel if you're not already subscribed. I do appreciate everyone's support. And if you see me and know me in Discord, send me a message if you need any of my support, and I'll talk to you there. Have a great week.